Hi friends, and welcome to another episode of Arctic Money and Risk Reward Matrix for summer 2025. I try to do these risk reward matrices 4 times a year. The same I try to do my portfolio update videos for you 4 times a year. I think that's a good interval to talk about both risk reward matrix and portfolio updates, so you actually see what I have in my own portfolio, in my portfolio videos, and in this video, risk reward matrix, you see how I feel about basically all of the companies on my watch list at the moment. Right here in front of your screens, you can see now how the situation was back in March. Have to say, not much has happened in the market. Well, obviously, between March and between June, when I'm filming this video now, we have having all sorts of emotions in the stock market, especially in the United States, especially in the form of Donald Trump and tariffs and such. I'm sure people who watch my videos, you are familiar what we have been going through these last 3 months. Basically, we went hugely down when Trump started his tariff wars, and then we are back up right where we started the year right now. So a lot has happened, and actually nothing has happened is the situation. This is the situation in the market. Now we get to the situation on my watch list, risk reward matrix. Those of you who haven't watched these videos before, really briefly, reward is obviously the annual returns I expect from the stock. In the risk factor, there goes how risky I perceive the company and its, for example, competitive situation in its industry, how risky I feel about the investment, and of course, in the risk factor there goes to the amount of how well I know the company, how good feeling I have about the company. So if the company operates in a risky industry, is maybe a growth stock with lots of uncertainty, and in an industry that is not my core competence, so to speak, I am not overly confident about this industry, that would mean that this stock would be high on the risk matrix. Or then it might be high on the risk matrix because, for example, I don't see any competitive advantages with it compared to its competitors, which might be the case, for example, with Kamux, you can see there. So basically 2 things go in the risk factor. Reward, obviously one thing, basically my valuation and how big of yearly gains from the stock, from the company I'm expecting. Let's get into it. As you can see, this was the situation in March when we last did the video. Not much has happened, but let me highlight one company that has dropped in the reward matrix this week, and it's on the upper right corner, Dr. Martens. I told you in March that Dr. Martens was my top pick along with Origin Enterprises and Kamux, as you can see. Well, Dr. Martens just published this week great results, great outlook on the future, and saw the stock rising plus 25% or something like that this week. So obviously what you're gonna see on the next slide, where we go now to this day, and you can see it right here in front of you, the situation this day. I have obviously needed to adjust Dr. Martens just because when the stock price goes up, the reward usually, at least here in the short term, goes down before I get, for example, I just did my valuation on Dr. Martens, but now I'm waiting 1 year for the next numbers before I do my next valuation, basically. So yeah, stock price goes up, reward goes down. That's how it usually goes. Well, obviously, if you talk about long term, then you obviously want to see the stock price going up and your valuation going up in tandem, which means that you have bought yourself a company for a decade or a lifetime. This is the ideal situation. But as said, now in the short term, when we talk 1 year timeline, I have needed to take Dr. Martens down just because stock price has gone up. So reward has gone down. You get what I say. Okay, so let's see. This is obviously what interests you, the situation today. So let's get right into it. Let's start obviously from the right upper corner where you have big risk and big reward both. And as you can see, I have only one company on my watch list. That is Kamux, company selling used cars in Finland, Germany and Sweden. Very hyped up company during the years of 21, 22. Then huge stock market crash, after which I pick my interest in the company. And I just feel, as I said, Kamux is high on the risk factor because used cars are pretty easy industry to understand, but the matter of the fact is that Kamux doesn't have any competitive advantage, in my opinion, compared to its competitors. So this is difficult industry, so deserves to be high on the risk axis, but the valuation is so attractive that I need to put the biggest reward on the company. Pretty simple, isn't it? Well, then you have the square in the middle. These, I would say, are the best companies I have on my watch list at the moment. Next video, after this video, will be most likely my portfolio update. So in that video, you will see what I have in my portfolio currently. So remember to subscribe to the channel so you won't miss that video coming soon. But in the square, you can see Flow Traders, uranium as a commodity, Energy Services of America, Biomedical Laboratories from Japan, and Origin Enterprises from Ireland. These companies represent best risk-reward propositions, in my opinion, in my watch list, on my watch list at the moment. Not much to say. They haven't moved much. I think actually they have all pretty much gone up since last March, but so has the broader market. So basically nothing special happening there. I feel these are great buys still today. Not as big of opportunities as Kamux, I feel, but they are good buys today even. Then if we go, let's go to the lower right-hand corner, where you have Greggs, Alphabet, Greggs, a fast food chain from UK, Alphabet, Google obviously, and Warren Buffett, Berkshire Hathaway. These companies, I would say, on my watch list are the companies, if you are uncomfortable in investing with smaller companies in weirder industries and weirder countries, like I have in my portfolio, but if you are seeking something more established, let's say so, I think Greggs, Alphabet, and Berkshire Hathaway are the best picks out of these big companies, huge companies in the market today. I feel that if you buy them today, surely you won't lose any money in the long term. Obviously, with Google, Alphabet, AI race is something that creates uncertainty and makes the industry interesting, and that might be the reason for me thinking Google has too low a stock price right now due to uncertainty in the AI race, AI competition. But nevertheless, I would say these are the big companies on my watch list that for someone who is seeking more established companies, these are the best picks in the market at the moment. Then we go up a little bit. We have Hims and Hers, has seen again huge growth in stock price. I think even my position is maybe already now plus 100% or something like that. I bought the stock in the beginning of this year and I have already doubled my money with it almost if not exactly already. Hims and Hers, telehealth company, addressing a huge total addressable market in health industry. Just this week made an acquisition, broadened their business into Europe from the United States, where the company originates from. Just huge opportunities in a huge health industry, growth company still, even though it's already, if I'm not completely mistaken, something like 10 billion is the market cap, so it by no means is this a small cap, but it's still, but just a matter of the fact that health industry and how they are trying to disrupt the health industry, the total addressable market is huge, so obviously there is huge opportunity. Doesn't come as a surprise to anyone probably that Hims and Hers has also competitors with when something is so tasty going after, you know, you are not the only company chasing those profits. There is competition from many companies. This is why I put it quite risky, but I know, yeah, the company can do amazing stuff in the future, still in my portfolio. And the rest of the portfolio I will talk in the next video. Then Dr. Martens, as I addressed, I'm happy seeing the stock price going up, still holding it in my portfolio because I think it has room to grow. Crocs I had in my portfolio, but this one I sold now because I wanted to raise some cash from my positions and ended up selling Crocs. Didn't make any money with it, but didn't make any losses with it. But it's now currently out of my portfolio. Still, this is kind of a difficult me because I think that Crocs valuation is really cheap. But then again, with what's happening in United States and retail industry as a whole with tariffs and such, there is increased amount of uncertainty to the time when I decided to invest in Crocs. So maybe that was one thing that made me sell the position. Okay, then let's address the lower left corner where we have a huge number of great companies in the lower left corner. Maybe Amazon is the one with the tailwind of robotics that I feel is most interesting to me. Amazon and can do special things also in the future. It's the one that might enter the right side of this matrix soon, or maybe should even already be there. I don't know. Need to do more research, I guess, but still not there with the valuation for me. I would like to let's just say about all the companies you see here in the left bottom corner. You see some of the best companies of the world. You clearly know why these are on my watch list, but they basically share the same story, all of them. They are too highly priced. The valuation is not there for me. They are not value investments at the moment. They have upside potential, of course. Companies such as Amazon, Meta, Microsoft, even Apple. These companies have huge upsides. We all know what these companies do and what they're capable of. But value investments, according to me, they are not at the moment. Then quickly address the upper left corner, which you can say is low reward, high risk. So companies you don't want to invest in. Alibaba, China risk, obviously. Might even say the same about Tesla, actually. But with Alibaba, the valuation is not there for me. I feel uncomfortable investing in China. Don't like what the country has been doing lately, recent years. Had Alibaba long time in my portfolio. I exited the position with zero returns after many years, and with everything happening geopolitically in the world, I am not saying I will never invest in China again, but these valuations would definitely need to be better, and China needs to show that they geopolitically stand for peace in the world also, and not be supporting countries like Russia and so forth. Well, we don't get into geopolitics now in this episode, just saying that with these valuations and how the world stands, I am not investing in Alibaba at the moment. Then you have Tesla. Well, yeah, maybe leave it to that. Everybody can see what's happening in the news, so I understand how Tesla bulls love their bull scenarios with robotics and such, self-driving robo-taxis. These are again promises made by Elon Musk. He has been making promises about the electric vehicles of Tesla throughout the 5 years, and they have all turned out to be, well, lies. None of those promises materialized, and Tesla's brand is down to the toilet at the moment due to Elon Musk's political stances. Huge risk, in my opinion. You have basically thrashed your brand. That's not a good thing ever. Tesla would probably be a better company without Elon Musk today. But to be honest, I don't even know if the brand is, if anybody is able to save the brand anymore after what Elon Musk has been doing lately. That's my opinion. I know some people still love Elon Musk, but yeah, then we disagree with each other, and that's okay. Finally, carriage services was in my portfolio a while back, a long time ago. Well, not that long time ago, but a while back. I did great profits with it, but has a lot of debt. That's the reason for the riskiness, and the valuation is now I don't understand it at all, what it's trading at today. So this was the risk reward matrix for summer 2025. Next video, the portfolio update. So if you're interested where my about 70 or 75% of my wealth is invested in, it's in those stocks. I will show you in my next portfolio update video, so subscribe to the channel for that. Leave a like if you learned something in this video. Let's just sum it up. Let's see what happens with Kamux. Obviously interesting case. Position sizing for me is the important thing because I see such a great valuation for the company, but it's also a different situation when the other side of the coin is that the company really doesn't have any competitive edge, competitive advantages to its competitors. Just doesn't have. I haven't identified it. Very interesting, very difficult, very tricky situation for a value investor like me, but let's see how this story unfolds. Other than that, thank you for watching the video. We continue in the portfolio update as said. See you there. Bye bye.